So, good morning, ladies and gentlemen, and welcome to this morning's press briefing. Happy New Year to you, the press, and for our viewers who just joined our live broadcast. I want to say a very big thank you to the press for your support last year. We're grateful for the strategic partnership and the key role you play in helping to propagate the bank's monetary policy decisions. This morning's press briefing follows the meetings of the Monetary Policy Committee last week, and this morning we'll be listening to the chairman. We'll give you the media an opportunity to ask questions at the end of his presentation. The press conference is live on Facebook at the Bank of Ghana. It's on the Bank of Ghana website, bog.go.gh, and on the bank's YouTube channel, Bank of Ghana. We are grateful to some of the media houses who are streaming this press conference live on their media portals. We continue to thank you so rich, most Ghanaians who are in various places. Thank you very much. It's time to listen to the chairman, and with a big round of applause, I respectfully invite the chairman of the Monetary Policy Committee and Governor of Bank of Ghana, Dr. Ines Addison, to deliver his statement. Shall we welcome him with a big round of applause?
Thank you very much, Sami. Good morning, ladies and gentlemen of the media. The Monetary Policy Committee last week held its 110th meeting, the first for the year 2023. The committee deliberated on recent global economic developments and how they contributed to shaping Ghana's macroeconomic conditions in 2022 and assess risks to the outlook for inflation and growth. The committee also took note of progress under the Government of Ghana's Domestic Debt Exchange Program, launched in December 2022 in the context of the ongoing negotiations with the International Monetary Fund for financial support. Below is a summary of the assessment for 2022, the outlook for 2023 and the medium term, and the key issues that inform the committee's decision on the stance of monetary policy. The global economy came under severe strain in 2022 on the back of continued spillovers from geopolitical tensions, continued tightening of monetary policy across countries, even as policy uncertainty heightened amidst fears of recession in the advanced economies. The latest Purchasing Managers' Indices point to broad-based slowdown in economic activity at the end of 2022, especially across advanced economies. In emerging market and developing economies, growth conditions weakened on account of tightened global financing conditions, dampened external demand, and moderated consumer spending as inflation rose. The latest IMF projections show that global growth will further moderate from the projected 3.2% in 2022 to 2.7% in 2023, reflecting mainly growth decline in advanced economies. In the last quarter of 2022, headline inflation started showing signs of easing in some advanced and emerging market economies, supported by declining commodity prices and weaker demand. This notwithstanding, there are underlying inflation pressures from the pass-through effects of past input costs, rising wages, especially in advanced economies, currency depreciation against the US dollar, and rising short-term inflation expectations, which remain major concerns for central banks. Global financing conditions tightened considerably on account of the aggressive policy stance in advanced economies to contain inflation, despite some moderation in rate hikes by the US Federal Reserve Bank in the last quarter of 2022. The European Central Bank, the Bank of England, and other central banks across advanced economies have also signaled intentions to maintain a tight policy stance to control inflation. Equity markets recovered somewhat amid the expectation that inflation had peaked and central banks might slow the pace of policy rate hikes. Longer-term bond yields declined while the US dollar lost some ground against major currencies. On the domestic front, inflation remained elevated in 2022, driven by both demand pressures and supply shocks. The two price readings since the last Mpc meeting showed a significant jump in headline inflation to 54.1% in December 2022, from 50.3% in November and 40.4% in October 2022. The acceleration in inflation was driven mainly by the lagged effects of the sharp currency depreciation recorded in October. Food and non-food inflation went up significantly. Food inflation surged to 59.7% in December, from 55.3% in November 2022, while non-food inflation rose to 49.9%, from 46.5% over the same comparative period. Underlying inflationary pressures remained similarly elevated. The bank's core inflation measure, which excludes energy and utility, accelerated to 53.2% in November 2022 from 49.7% in November. However, the bank's surveys on consumers, businesses, and the financial sector showed that inflation expectations eased in December 2022. This indicates agents' expectations of moderation in inflationary pressures on the horizon. Economic activity for the first 3 quarters of 2022 was within projections, albeit at a moderated pace than a year earlier. The latest data from the Ghana Statistical Service showed that the real GDP expanded at an annual rate of 3.6% during the first 3 quarters of 2022, relative to 4.8% during the corresponding period in 2021. Non-oil GDP growth also moderated to 4.3% from 4.7% over the same comparative period. The observed growth outturn was driven by the services and agricultural sectors. Further into the 4th quarter, the bank's high-frequency indicators recorded a moderation in economic activity. The updated composite index of economic activity contracted by 6.2% in November 2022 compared with a growth of 10.2% in the same period of 2021. The major items that weighed down the index during the period were port activity, cement sales, imports, and industrial consumption of electricity. The latest confidence surveys conducted by the bank in December 2022 pointed to some marginal improvement in sentiments. Consumer confidence improved on the back of the recent reductions in ex-pump petroleum prices and transportation fares. Business sentiments also turned positive due to the achievement of short-term targets and optimism about company and industry prospects, following the rebound of the local currency during the month. The survey findings were broadly aligned with observed trends in Ghana's Purchasing Managers Index, which improved to 47% in December 2022 from 44.9% in the previous month. Broad money supply, including foreign currency deposits, grew by 33% in year-on-year terms in December 2022 relative to 12.5% in December 2021. The growth in M2 Plus was driven mainly by significant expansion in the net domestic assets of the depository corporation sector, moderated by a decline in net foreign assets. Reserve money recorded an annual growth of 57.5% relative to 19.9% over the same comparative period. Similarly, private sector credit growth picked up, partly reflecting continued portfolio rebalancing by banks and revaluation effects on foreign currency denominated debt credit. In nominal terms, private sector credit increased by 31.8% in December 2022 compared with 11.2% in December 2021. In real terms, however, private sector credit contracted sharply by 14.5% compared with 1.3% contraction over the review period a year ago. Developments in the banking sector were broadly reflective of current macroeconomic conditions with rising cost of credit due to inflationary pressures and the revaluation-driven balance sheet performance. As a result, the performance of the sector moderated in December 2022 compared with December 2021, with some key financial soundness indicators recording significant declines. Profitability levels in the banking sector have declined, driven by the mark-to-market losses on investments, higher impairments on loans, and rising operating costs. Profit after tax was 3.9 billion Ghana cedis at the end of December 2022, representing an 18.9% contraction year-on-year compared to 12.3% annual growth recorded in 2021. Net interest income grew by 23% to 15.8 billion Ghana cedis, higher than the growth of 14.5% in 2021. Net fees and commissions went up by 27.4% to 3.7 billion Ghana cedis from the growth of 24.8% recorded in 2021. Accordingly, operating income increased by 30.9% compared with 14.6% recorded a year earlier. The strong outturn in operating income was, however, moderated by increased operating expenses and provisioning during the year. Operating expenses rose by 32.2% in December 2022 compared to 14.2% in 2021. Provisions also increased sharply by 184% in December 2022 relative to a contraction of 4.7% a year earlier, due to the strong uptick in credit growth, elevated credit risks, and the impairments on investments. As a result, profit before tax declined by 13% to 6.4 billion Ghana cedis in December 2022, compared with an annual growth of 22.1% a year earlier. New loans and advances in 2022 increased to 53.7 billion Ghana cedis, reflecting an annual growth of 47.5% compared with a growth of 6.8% in 2021. Trends in financial soundness indicators were mixed, reflecting heightened risks faced by the industry. The industry's capital adequacy ratio declined to 16.6%, but remained above the prudential minimum of 13% as of December 2022, from 19.6% in December 2021, attributed to losses on mark-to-market investments, increase in risk-weighted assets of banks from the high growth in actual credit, and the price effect of the depreciation of the Ghana cedi on foreign currency denominated loans. The sector's profitability indicators, namely the return on equity and the return on assets, also declined during the period, in line with declining profit after tax and profit before tax, respectively. The non-performing loans ratio, however, improved to 14.8% in December 2022 compared to 15.2% in December 2021 on account of high credit growth relative to the increased stock of NPLs between the two periods. Total assets increased to 221 billion Ghana cedis, representing an annual growth of 22.9% in December 2022 compared to a growth of 20.4% a year earlier. Total deposits ended the year at 157.9 billion Ghana cedis, representing an increase of 30.4% in 2022 relative to a growth of 16.6% in 2021. Credit continued to increase, recording a growth of 30.2% to 70 billion Ghana cedis from 53.8 billion Ghana cedis in December 2021. Total investments, on the other hand, contracted by 4.8% to 79.2 billion Ghana cedis in December 2022, relative to a 29% annual growth in 2021, as banks rebalanced asset portfolios. Provisional data on budget execution for the period January to November 2022 indicated an overall broad fiscal deficit cash of 9.8% of GDP against the program target of 6.7% of GDP. The corresponding primary balance for the period was a deficit of 18.8 billion Ghana cedis, that's 3.1% of GDP, against a deficit target of 3.1 billion Ghana cedis, that is 0.5% of GDP. Over the review period, total revenue and grants was 81.8 billion Ghana cedis, 13.3% of GDP, short of the projected target of 84 billion Ghana cedis, that is 11.7% of GDP. Total expenditure of 142.2 billion Ghana cedis, that is 23.1% of GDP, was above the program target of 125.4 billion Ghana cedis, that is 20.4% of GDP. The deficit of 60.4 billion Ghana cedis was financed mainly from the domestic sector. The external sector performance in 2022 was shaped by developments in the global economy. There was a significant improvement in the merchandise trade account, which helped to narrow the current account deficit to 2.3% of GDP from 3.2% in 2021. These gains were, however, negated by huge net outflows in the capital and financial account, due mainly to external factors which caused portfolio reversals and reduced foreign direct investments, resulting in an overall balance of payments deficit and a loss of reserves. Ghana's key export commodity prices remain volatile on the global markets. Average crude oil prices on year-on-year terms increased by 81.3%, rising from $85.5 per barrel in January 2022 to a high of $117.2 per barrel in June on supply concerns, before retreating to $81.3 per barrel in December on the back of reduced demand amid recession fears. Cocoa futures traded largely in the negative during most parts of 2022. Prices peaked at $2,681.11 $11 per ton in February on the back of lower production volumes, and thereafter eased to a low of $2,333.33 per ton in July 2022, owing to weak grinding data. At the end of 2022, cocoa prices rose to $2,538.6 per ton, representing 2.3% year-on-year growth. Gold prices hit record levels of $1,949.4 per fine ounce in March, benefiting from heightened global uncertainties, but weakened later due to the interest rate hikes and the stronger US dollar, to end the year at $1,796.2 per fine ounce, representing 8.7% annual growth. The trade surplus more than doubled to $2.8 billion in 2022 compared with $1.1 billion in 2021. This was driven by higher export growth relative to the growth in imports. Total exports increased by 18.2% year-on-year to $17.4 billion, driven by crude oil, gold, and other export earnings. This compares with $14.7 billion export earnings recorded in 2021. Crude oil export earnings reached $5.4 billion, driven by sharp increases in prices from $3.9 billion in 2021, representing an increase of 37.5% in year-on-year terms. Gold exports also increased by 30% to $6.6 billion on the back of increased volumes from small-scale gold production. Cocoa exports, however, declined to $2.2 billion from $2.8 billion, reflecting both price and volume reductions. Other exports, including non-traditional exports, reached $3.2 billion, an increase of 10.2%. The total import bill increased by 7% to $14.65 billion in 2022 due to higher payments for oil and gas imports. Of the total import bill, oil and gas, mainly refined petroleum imports, amounted to $4.7 billion, driven by higher prices compared to $2.7 billion in 2021, representing a 71.3% annual growth. On the other hand, the sharp exchange rate depreciation led to non-oil imports compression of 8.4% to $10 billion, reflecting mainly in consumption and capital goods imports. The improved trade surplus, together with the higher remittances inflow, helped to narrow the current account deficit to $1.64 billion from $2.5 billion in 2021, despite higher payments recorded in the services and income accounts. The capital and financial accounts recorded a net outflow of $2.2 billion compared with a net inflow of $3.3 billion recorded in 2021. The current account deficit, together with the net capital and financial account outflow, resulted in an overall balance of payments deficit of $3.6 billion in 2022, compared to a surplus of $510.1 million in 2021. At the end of December 2022, the stock of gross international reserves stood at $6.2 billion, equivalent to 2.7 months of import cover. from a stock position of 9.7 billion US dollars, equivalent to 4.4 months of import cover at the end of December 2021. The net international reserve position stood at 2.4 billion US dollars from 6.1 billion US dollars over the same comparative period. The local currency came under intense pressure in the year, reflecting the portfolio reversals and lower foreign direct investment inflows, while demand pressures increased. For the year 2022, the Ghana cedi depreciated by 30% against the US dollar after reversals of some of the losses in December. This compares with 4.1% depreciation in 2021. In the year to January 26, 2023, the cedi cumulatively depreciated by 19.1%, 21.4%, and 20.7% against the US dollar, the pound, and the euro, respectively. In comparison with the same period of last year, the cedi had depreciated by 1.5% against the US dollar and appreciated by 0.1% and 0.7% against the pound and the euro, respectively. Summary and outlook. The global economic outlook remains uncertain owing to broad-based and elevated inflation, policy tightening, worsening financing conditions, and lingering spillover effects of geopolitical tensions. These headwinds are likely to persist through the first half of 2023, driving down confidence and weakening real household disposable incomes in advanced and emerging market economies. The ongoing geopolitical tensions continue to weigh on economic and policy uncertainty, especially in the euro area. For emerging and developing economies, growth momentum is projected to remain firm, supported by the relaxation of lockdown restrictions in China and the still high commodity prices. Though showing signs of cooling, inflation levels remain elevated, and central banks, especially in advanced economies, have signaled the need to maintain the tight monetary policy stance to contain inflationary pressures, albeit at a measured pace. Domestic growth conditions softened in 2022 and is projected to moderate further and remain below potential over the near term based on the elevated inflation levels. The updated CIEA showed continued dip in economic activity despite the slight improvement in consumer and business sentiments from the latest surveys. In nominal terms, credit to the private sector rose sharply, but was moderated in real terms by price pressures. There are emerging signs that the current macroeconomic conditions are spilling over to the banking sector. Profitability levels have declined alongside other financial soundness indicators. The latest macro-prudential risk assessments indicated increased pressure on solvency and liquidity of banks ahead of the implementation of the domestic debt exchange program. To moderate the impact on the sector, the Bank of Ghana has announced some regulatory reliefs for banks to help preserve financial stability. The government of Ghana has reached a staff-level agreement with the IMF, which spells out measures that will put the fiscal on the path of consolidation. Consistent with the SLA was the 2023 budget, which has just been passed by Parliament and front-loads the consolidation efforts. Revenue-enhanced measures, such as the VAT increase of 2.5%, the complete removal of benchmark imports on complete removal of the discount on benchmark imports on values on imports, and the review of the e-levy should help improve the revenue outlook. On the expenditure side, the lower capping on transfers to earmarked funds from 25 to 17.5%, and the reduction of budgetary allocation to goods and services, as well as rationalization of executive compensation, should help contain expenditures in 2023. The concerns being expressed in the public domain relating to high government expenditures have been addressed in the SLA and reflected in the 2023 budget. The SLA is also contingent on the domestic debt exchange program and external debt restructuring, which, when concluded and the necessary financial commitments obtained, would allow the presentation of the SLA to the IMF board. The MPC believes that these measures will help restore fiscal and debt sustainability and bring down inflation, as well as help stabilize the currency. In the interim, the MPC sees the need to remain vigilant and moderate liquidity in the system to underpin the macroeconomic adjustments taking place to drive inflation on a downward path. Under the circumstances, the committee decided to increase the policy rate by 100 basis points to 28%. Thank you.
A big round of applause for Mr. Chairman. A big one. Thank you very much. It's question time. Two questions per media house, and respectfully, let's be very brief with our questions. Let's be very brief with the long preambles. First five, George Wafi, Toma, Joshua, Najable. Yeah, so first four. Okay, sure, George.
Good morning. My name is George Yafe from Joy FM. Governor, I'm trying to find out what is the plan in case an IMF program support in terms of balance of payment delays. What is the plan to support the reserves to meet the dollar demands? I mean, the last time when you appeared before Parliament Account Committee, you talked about reserves getting to 1.5. There are reports that it's dropped to about a month or so. What is the plan to ensure that you be able to meet the dollar demands if the program doesn't come on or support doesn't come in April this year? And also the second one, it has to do about, there have been some argument that maybe, and I know you've always said your position when you come to the MPC, the briefing, that should we get to a situation where we'll get a fixed rate and defend it? Look at what happened to the currency in December, the blips up and down. And when you engage a lot of businesses, their concern is that they don't even mind if today 20 Ghana cedis even to $1, and that can be stable for even like 3 or 4 months. Do you think that the time has come to take a second look, even though you want the forces of demand and supply to take the pace? Like, let's have a fixed rate, let's defend it. Thank you.
First of all, sir, has the Bank of Ghana, what's the result of the Bank of Ghana's latest stress test for banks who have been affected by the restructuring of the terms of agreement for treasury bonds? And what is the situation concerning your ability to provide temporary liquidity for them, like the Financial Stability Fund or Emergency Liquidity Assistance or whatever? Yeah. Then the other one, sir, is this. Recently you did a special auction for BDCs. Now, is the Bank of Ghana considering actually restricting its own forex, the forex is supplied into the market to certain priority areas? Since, I mean, last year you said that the non-oil import bill went down by 8.4%, and we are still alive. Does it mean that the Bank of Ghana will now consider giving effect only for areas which are important, rather than just put it on the market and let people use it to buy matchboxes and matchsticks and toothpicks? Thank you.
Thomas, thank you very much. So please introduce yourself, your name, and your media house.
Okay. My name is Najak Bliago with GBC. So, Governor, there are reports that a stabilization fund would cover the insurance industry. I want to know the contribution of the Bank of Ghana to this particular fund and what would be the pricing. Thank you.
Thank you. Joshua, your name, media house.
My name is Joshua from from Business and Financial Times. So the first question has to do with, does the bank have an estimated timeline for it to return to the medium-term target? Is there an estimated timeline for looking at where inflation is heading towards? And also, the second one has to do with, would there be a limit to your hawkish stance in terms of an MPR? Thank you.
Yes, Joshua, thank you. Mr. Chairman, we are ready for your response. Thank you.
Very interesting questions. The issue about whether there will be a limit to the hawkish policy stance of the central bank. I wonder how you would characterize a policy rate of 28% with the headline inflation of 54 as hawkish. Because in real terms, that's a negative real rate. So we don't consider our stance as necessarily hawkish, but we are focused on our mandate. And that's how I see it. We try as much as possible to take policy decisions which would help bring inflation down. And in that context, the direction of inflation is not only going to be determined by the policy rate, but a whole lot of other factors, including the macroeconomic framework which we have described. We spoke about the SLA agreement that the government had reached to, and the components of that SLA. All of those components help in the stabilization process and helps to bring inflation down. And if you look at the time frame, we are looking at a 3 to 4 year time frame. This is what the IMF program is designed to do. Within that time frame, we expect to bring inflation down to the Bank of Ghana target, the single-digit target, plus or minus 2% around the central point of 8. So this is really the objective of monetary policy over the next 3 to 5 years. But I think it's important, coming back to the other questions that came up from George Wiafi and Thomas on this issue of prioritization of foreign exchange, fixed rate, or the flips and flops, what you described as the flips and flops. You don't formulate policies on the basis of a crisis year. It's important for all of us to understand that what we saw in 2022 is not a normal year. And therefore, we cannot base our policy choices in a context of, instability. The flexible foreign exchange system has worked very well for Ghana since 1986, when we liberalized the market. Now, that framework assumes that your macroeconomic fundamentals will be strong. And there have been years that that framework has delivered exchange rate stability. Even in 2021, the cedi was stable. The year before that, 2019, 2018, we were able to keep the cedi relatively stable, maximum 5%, 6% depreciation for the whole year. So yes, if something goes wrong with the underlying economy and you see a much higher depreciation, you don't go back and say, oh, the framework is the problem. The problem is not the framework. The problem is the underlying economy and the problems with that economy. And those have been fixed, the components of which we have, spelled out in the press release. What you described as flips and flops occurred because of, you're aware of what had happened in October of last year with rumors about a debt exchange and all of that. I mean, we don't undertake debt exchanges every year. It's not a normal development. And we cannot, on the basis of the experience, because of, speculations around the debt exchange, go back to fixing the exchange rate. So that's my response to that question. These are crisis issues, and you manage crisis. During a crisis, certain things occur. It's similar to the issue raised by Thomas on, priority areas for foreign exchange. All of that were crisis measures. During a crisis, you're short of foreign exchange, you try to identify your critical imports and meet those imports, first. We do not expect that this crisis would continue. We expect that the crisis will be resolved. And these measures are, in a sense, temporary, and we do not anticipate that we would continue to be in a situation where we are persistently short of foreign exchange and therefore be looking for, items to exclude from our financing list. No, that's not the vision. The issue of the results of the Bank of Ghana stress test, yes, the bank did the stress tests on the ability of these 23 or so banks to withstand the impact of the debt exchange. We did see the numbers, the implications for liquidity, and the implications for capital. And on the basis of that exercise, the bank came out with regulatory reliefs, which we thought would help them deal with the impact on liquidity and capital. We agreed to reduce the cash reserve ratio from 14% to 12% on domestic currency deposits, reduce the cash reserve ratio from 13 to 12% on foreign currency deposits. These measures gives liquidity back to the banks. It addresses the issue of the impact of liquidity. We also dealt with the issue of capital by reducing the capital conservation buffer by 3%. So the capital adequacy ratio was reduced from 13 to 10%. And even some of the technicalities surrounding the debt exchange in terms of derecognition losses and all of that, we agreed to have them restore its impact on capital over a 4-year period. So there are a lot of things that the Bank of Ghana has agreed to do to help the banks deal with the impact of the domestic debt exchange on capital and liquidity. Then the question that George asked about what is the plan to support reserves. We've gone very far. You're aware that we've gone very far with the staff level agreement. We hopefully should be seeing the end of the domestic debt exchange. We are also making progress on the external side, on the external debt restructuring. The necessary committees have all been formed. And we are confident that by the end of the first quarter, we should be able to get a disbursement from the IMF to help augment the foreign exchange resources of the central bank. So I don't foresee a situation where, we would be in that kind of trouble. Now, the reason why the government had to announce a debt standstill is because we needed to conserve the foreign exchange that we had. A lot of people do not recognize that even though we were not able to go to the capital market in 2022, we continue to service our debt. We continue to pay for oil. We continue to do other payments. Where did we get those resources from? They came from the reserves of the central bank. And that's why we lost $3.6 billion in reserves. Now, what the debt standstill does is to sort of plug that leak. And therefore, going forward, we do not expect to be losing reserves because of those types of payments at the rate at which we were losing reserves earlier. And that also means that we should see that the central bank's reserve should strengthen and stabilize over the next quarter or so. And then after the next quarter, if these disbursements come through, we should be able to start building reserves. So that really is the outlook for us in terms of where we are, negotiations with the fund, and where we expect to be by the end of the first quarter, later second quarter of the year. There was a question about stabilization fund. This is a financial sector stabilization fund to be supported by donor partners, already capitalized at $1 billion. Already we have the World Bank pledging to support it with $250 million. Right. Bank of Ghana, we have our own liquidity arrangements already for the banks, and therefore we do not plan to be part of this financial sector stabilization fund, which is mainly financed by the external development partners. I'm not sure if there's anything that I have missed. These are the questions that I have picked up from the first three.
Returns inflation?
Return inflation, I addressed it in terms of the framework and the IMF program and the 3-4 year horizon that we have in mind.
Suli, Elom, Nanaoye, Sani, and Isaac Edu. We'll do that third one, right? So, your name, Media House.
Governor, my name is Suleiman Mustafa. I write for the Daily Graphic. I think George's question still remains relevant about the options we have, the plan B. I appreciate the fact that, you don't expect any further delay. But I mean, when this whole negotiation started, we never anticipated we could get to the end of the first quarter. Now we are going to the end of the first quarter. But in case, I mean, we don't foresee a delay, but do we have a plan B? That's a question that, I mean, I think still remains relevant. But the next question I have is about debt sustainability. Looking at the recent increases in the policy rates and the increase in interest rates, how does this sink into the attainment of debt sustainability? Thank you.
My name is Nanoye Ankara. I report for Asasi Radio. Mr. Governor, rural banks have almost 40% of their total liquid assets in government bonds. They are complaining that they were not consulted before including them in the debt DDEP. Before this, I gathered that most rural banks were struggling. And so what is the way forward for them? It appears they are a special case that you have to look at. My second one has to do with the cocoa bills, which institutions or some banks decided to reissue to individuals without letting you or your outfit know. Doesn't it point to some regulatory lapses there? And how do you intend to deal with this so it doesn't happen again? Thank you.
Thank you very much. Sunny.
Thank you so much, Sami. My name is Sani Abdurrahman. I work with TV3. My first question, Governor, if you look at the forbearance measures being put in place to mitigate the impact of the domestic debt exchange on the financial sector, for example, don't you think that it could compromise the integrity of the financial sector? And my second question has to do with the Gold for Oil program. What is the quantity of gold the central bank has used for the 41,000 metric whatever of oil that we've seen, and how far will the bank go, and what will be the implication on the also reserve that the bank intends to build through the domestic gold purchasing program? Thank you.
Very much. Isaac Edu.
Good afternoon. I'm Isaac Edu from The Finder. How successful has the BOG been in flashing out the black market system? And then my second question has been asked by Nanoye, but then I would want to know whether there's any punitive measures you want to trigger against the banks that went against the rules. Thank you.
Very much. Elom, last question for this round.
Thank you very much. My name is Elom. I write for Economic Times newspaper. Mr. Governor, given the already high level of reserve money and financing of government deficits, are you worried about the medium-term consequences for money supply and inflation? If yes, is government being guided enough in giving concession in this regard? My second question has to do with, is it true that the IMF has asked for zero financing MOU to be signed between the government and Bank of Ghana under the IMF program? Thank you.
Thank you very much. Mr. Chairman, we're ready for a response. Thank you.
Yeah, thank you very much for those questions. I'm tempted to go into this MOU question that is brought up first. But in a sense, I think it's linked to this question by our friend from GTV on Plan B. Because in June of 2022, we didn't have Plan B. Right? We didn't have a Plan B. We started the year with no access to capital markets. We were not getting enough revenues. The economy needed to run, right? So the central bank stepped in to ensure that the economy functioned so that we continue to service our debts, right? Holders of government instruments got their interest payments. Holders of sovereign bonds got their interest payments, right? This was the scenario in June of 2022. There was no plan B. The revenues were not there, but the payments needed to be made. And the central bank had to support the system. This issue of financing, which keeps coming up. There was really no choice, and there was no plan B. But the system needed to be kept stable. But once the decision was made for plan B, which is to go to the IMF, that's the plan B, right? Once the decision to go to the IMF was made, which was a plan B, right? Because we were on plan A, which was not sustainable. But they were eventually going to run out of, Bank of Ghana cannot continue to hold the system. So the plan B is the new agreements that we have. The SLA is the plan B. And the fiscal and expenditure and revenue measures are the plan B. And that is what would more or less help us to sustain the progress that we are making. So yes, under the plan B, central bank may not even need to give government any money. That's why I'm saying that it's related to the question of the MOU on the central bank. It might not even be necessary. But in most of the programs that we have had with the fund, yes, we have had to sign MOUs of this nature because if we implement the policies as designed, there will be no need for the central bank to step in. This is really the issue there. On how successful we have been with the black market, I think we have been very successful. I don't think that market is as disruptive as it used to be. We got a lot of help from the security agencies to deal with that particular situation. And I think they are still taking that assignment very seriously from the feedback that I get from the IGP himself. Now, this issue on cocoa bills, which I believe came from the lady from Asasi, why the bank sold the bills to individuals. I mean, cocoa bills like Bank of Ghana bills have been in existence for a very long time, right? And therefore, I'm sure there are people who, were not properly briefed on, the full rules regarding, the sale of those bills. But having said that, I think we would eventually find out, which banks were involved in that particular practice, and the appropriate discussions will be held with them. The gold for oil. But before I go to the gold for oil, there was a question of whether the forbearance measures would compromise the integrity of the financial sector. I do not think so. We do not think that the forbearance measures that we have would compromise stability. When you talk about financial sector in situations like this, it's about stability. Our banks are fairly well capitalized. As you know, most of them were holding capital in excess of the requirement, and we think that those that fall slightly below the requirement will be given enough time to recapitalize. That should not compromise integrity. Besides, there are backstops both the Financial Stability Fund and the central bank would be there to support the system. So I don't see any issues of compromising the integrity of the sector there. But on the gold for oil, I think the question was on how much we had done. I anticipated this question coming up. As you know, we started this whole program to build reserves, to augment our reserves with the purchases of gold. That's how all of this started. And since the beginning of the program, we have bought 181,435.25 ounces, valued at around 348 million US dollars. This is for reserves, gold for reserves. Now, gold for oil, so far we've purchased 50,931, just about 100 million. In fact, the exact number is 96.8 million US dollars. But there's enough gold, right? There's enough gold. I'm aware that PMMC says that there is enough gold that they can buy to support the gold for oil deal. And basically, for me, the issue is about, if you have a government-to-government arrangement, which would allow you to buy refined oil at a much cheaper price than the BDCs will do, then we are helping the government, bring in refined oil at a cheaper price, which hopefully would eventually feed in to lower prices at the pump. So that's the impact of the Gold for Oil program on prices at the pump. At the same time, the BDCs who would have supplied that portion of gold would no more be in the market looking for foreign exchange to go and buy, right? To go and buy the oil. So you expect that the pressure or the demand pressure coming from that segment of the market also would be sort of reduced and indirectly help to take pressure off of the currency. So these are really the two issues concerning that program, helping to take pressure of the Ghanaian cedi and then at the same time using the government-to-government arrangement to bring prices down at the pump. And so far, it seems to be working well. We can arrange for our Director of Financial Markets to give you the details of how all of this is working. I don't think that would be appropriate at this forum, but he can arrange to give you more details on the operationalization of this policy. Sorry. Rural and community banks, whether they would have to be exempted from the debt exchange. I've seen the letter from them to the minister. I believe we should allow the minister to take a decision on that. But we even exempted them from the financial sector reforms. I'm sure you know that no rural bank was closed down during the cleanup. A lot of them are still out there that are insolvent. They have customers' funds that they are not able to pay. I know of one in the Volta region. Just yesterday I was speaking to the landlord of that rural bank in the Volta region, and he wants his money. He says, this rural bank is in my house and they are not paid rent for 4 years, 5 years. and you know, the customers' monies are locked up in there. I said, well, they were not part of the cleanup, and there's really not much that we can do. But rural banks are complicated institutions, and I understand why they were exempted from the cleanup, but it hasn't helped. I mean, if we had tried to clean it up, at least some of the depositors in the rural banks would have had their monies by now, and would have resolved those institutions that are insolvent. So yes, I'm sure the minister will come back on their request for exemption from this debt exchange. Anything else that I need?
Moses Muzat, Bloomberg, Justice, Novan, Edward Nyakon, and Moses. Muzat, shoot.
Thank you very much, Governor. Tomorrow is the deadline for the debt exchange program. I wish to know how many banks have signed on so far, and aside banks, which other institutions are signing on. My second question is on the debt standstill. If you could just help us to be double sure. We know the government has announced that it's not going to make payments on external debts, but we want to know 2026 coupon fell due on the 18th of January. 2026 Eurobond coupon fell due on the 18th of January. We would like to know if the government paid. If it didn't, if they're planning to pay, and what is the grace period for the government to pay? And linked to this, a domestic 2023 domestic bond matured on the 16th of February. Did the government pay? Did it redeem the debt?
So, thank you very much. Please wrap up.
To deal with it.
Yeah,
Thank
we've
you.
done more than two, right? Thank you. Novan.
My name is Novan Akwaheford. I work for Novan Report. Mr. Governor, I want to find out from you, how will the debt exchange program affect the debt owed Bank of Ghana? I stand to be corrected. I have some 35.8 billion. That's by the debt owed by government to the central bank. And how much is the central bank itself expected to lose in this program?
Mr. Akwayefo, thank you very much. Justice.
Thank you very much. My name is Justice. I work for the Xinhua News Agency. Please indulge me. All my questions are just follow-ups to existing questions already. Now, the first one is some depositors of some of the failed financial institutions were given bonds, to hold for their claims. I want to know whether these bonds are also affected by the domestic debt exchange program. And then secondly, the gold for oil program. I would like to know some of the trade-offs. For instance, it looks like we become the middlemen between the small-scale miners and those they've been selling to in Dubai, because the instruction was that small-scale miners should now sell their gold to PMMC. Now, I would like to know, at what rate do they sell to PMMC? What would they lose, or do they gain more? And at what rate do our new customers, maybe partners in Dubai, take what we buy from the small-scale miners? Then the last there's the last follow-up.
We've done two questions already. Thank you very much. Mr. Donyako.
My name is Edward Nyako from GBC. Governor, my question is tied to the gold for oil deal. I alluded to the fact that the pass-through effect will impact on pricing at the pumps. We hear 41,000 metric tons are in, but predictions are that price of oil is going to go up. When do we foresee that these easing of pricing of oil on the market to be experienced by customers at the pump? And then secondly, when you appear before the Public Accounts Committee, you alluded to the fact that speculation drove the instability that was witnessed on the Forex. What is the bank doing this time around to make sure that, what is your plan to stem the drive of speculation on the Forex market this year? Thank you.
Much. Now, last question for today, Moses.
Governor, how are you? I am fine. Governor, in November, our external debt rose by about $800 million in November, but we didn't see a corresponding surge in our FX reserves. What may have accounted for that? And two, return on equity for banks dipped to 14.6% in December from a previous historical average of 20%. What also accounted for that?
Thank you very much. Thank you. Chairman, ready for a response. Thank you.
Well, thank you again very much for these questions. A lot of them, as you yourself called them, are follow-up questions, especially on the debt exchange. And I don't think it would be fair for me to be trying to lead the discussions on the debt exchange. I think that we should allow the minister to deal with those issues and the number of banks that have tendered. Even if I knew, I won't tell you. Right. So, I mean, let's be clear on that. Now, the debt exchange impact on Bank of Ghana. Yes, we also hold a significant amount of debt of government. It would have a similar impact to what the other banks are also experiencing, but we are looking at it. The work on that is still ongoing, and I do not want to comment on that at this stage. Now, the depositors of failed institutions who were issued bonds, I understand most of these bonds had already been converted into cash, so that issue doesn't exist anymore. The individuals who got bonds were given cash. But if you are referring to the financial sector bonds that were given to banks such as CBG and the P&A with GCB, and all of that are part of the debt perimeter, and therefore will be subject to the restructuring that is going on. On the trade-offs with the gold for oil, I don't see any trade-offs. As I said, from what I hear, the PMMC says that there's quite an amount of gold available to be bought. And remember, we are buying this at the market prices. It's not as if government is buying the gold at a discount. We are all buying the gold at market prices. So I really don't see where the trade-offs are in this particular case. I mean, if we were buying it at a price which was different from what the licensed or the small-scale dealers were doing, then you could see where the trade-offs would lie. But there are no price differentials between the two markets, to the best of my knowledge. And then this question on external debt went up by 800. I'm not quite sure if you understood well what you were trying to convey and did not see a corresponding increase in foreign reserves. Because it's not normal for you to see, even if you get a loan of 800 million in a particular month, it doesn't mean that your reserves in that month would go up by 800 million. There are uses of funds also. So it depends on what the outflows for that month has been. So if you didn't see it, then maybe there were corresponding outflows during the period which did not allow the inflow to reflect in the reserves. Then this question about return on equity, and so you're comparing a crisis period to a normal year, right? So you expect that even in the crisis, the banks should make a return on equity of 20%. I think you must recognize that these are not normal times. We need to stabilize the economy, get the economy back on track for growth to pick up, and then the banks would also get a decent return on their equity. So yes, probably 2022 is not a good year, but over the next 3 or so years, as the economy picks up, we'll see an improvement in profitability of the banks, and the return on equity would improve as well. I'm not sure what Edward Nyakun was trying to say. About when should we see this at the pump? Again, this is one of the questions I will refer to my Director of Financial Markets, because he is in the kitchen. So he knows where the shipment is and where that would hit the pumps and all of that. So he probably might be in a better position to tell you when to expect the impact on prices. But remember, the price build-up is not only the other variables in there, right? So we just have to pray that all the variables move in the correct direction for the pump prices, to go in the direction that you want to see it. So I really don't see any other question that we haven't dealt with. I mean, I think these are the issues that I have. I think we should have faith. We are trying very hard to get this debt exchange completed, trying very hard to get the external restructuring also through, and all of that would help us to move the discussion from the staff level to the board. And as I explained earlier on, this is the plan B. And hopefully once that is successful, we should get a disbursement by the end of the first quarter or soon after that, which would augment our foreign exchange reserves and bolster confidence into the Ghanaian economy. Thank you very much.
Mr. Chairman, a very big round of applause from Mr. Chairman. The press, we encourage you to report accurately, respectfully. Let's not be in a hurry to report and to put out information that doesn't represent the data that we provided. We are always available if you need any detailed clarifications, any information. Respectfully, can you contact us? Like we always do, we provide you with all the information. Our Director of Research and Director of Financial Markets will be available after the press briefing to provide further information and more information if you need any other information. We're so grateful to you for coming to make sure that our people, Ghanaian people, get to watch the press conference and also to hear from the Chairman of the Monetary Policy Committee. Chairman, we are very grateful for your time. First and Second Deputy Governors, thank you very much. And to our Director of Research and Director of Financial Markets and Bank Secretary, thank you for coming. God will meet soon. Good afternoon.